Ladies and gentlemen, good day and welcome to the Action Construction Equipment Limited Q3 FY22 earnings conference call hosted by Edelweiss Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Himanshu Yadav from Edelweiss Broking Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Edelweiss Wealth, I welcome you all to the call. From the management, we are joined by Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, CFO, and Mr. Vyom Agarwal, Head Investor Relations. We will have opening remarks by the management followed by Q&A session. Thank you, and over to you, sir.
Yeah, good afternoon, everybody. I'm Saurabh Agarwal from ACE, and welcome to this earnings conference call for discussing the results for the quarter and 9 months ended 31st December 21. We hope that you are all staying safe and healthy. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agarwal. I hope that all of you have had a chance to look at the company's financial statements and earnings presentation, which have been circulated and uploaded at the stock exchanges. To brief you on the financial performance for the third quarter of FY22, the operational revenue grew by 9% on year-on-year basis to 437 crores, which is our best ever quarter 3 revenue so far, with an EBITDA of rupees 44.5 crores. The EBITDA margin stood at 10.2%, even in the wake of unabated and unprecedented inflationary pressures and lackluster festive season coupled with Omicron scare November onwards. The profit before tax stood at 8.5%, that is around 37 crores, and PAT margin was at 6.3%, around 27.5 crores. In the backdrop of continued input cost inflation, we have dynamically managed the business to deliver margins in a consistent range over a period of time. For the 9 months ended FY22, the operational revenue grew by 45% as compared to similar period of FY21 and stood at 1119 crores with EBITDA of 114 crores, which is 48% growth on year-on-year basis, and PAT of rupees 70 crores, which is 69% growth on year-on-year basis. The EBITDA margins of 10.2% and net profit margins of 6.2% are also better as compared to last year's 9 month results. Now let me give you a sequential perspective. For the third quarter of FY22, the operational revenue grew by 21% on quarter-on-quarter basis. The EBITDA during the quarter increased by 20% on quarter-on-quarter basis, and PBT and PAT numbers registered a growth of 24 and 20% respectively. In the crane segment, during the quarter gone by, we reiterated our dominant market leadership position and registered revenue of 269 crores with margins of 11.75%. The construction equipment segment clocked revenue of 47 crores with EBITDA of 5.45%. The planning segment recorded revenue of 43 crores with margins at 11.76%, and the agri division registered revenue of 77 crores while maintaining margins at 8.26%. Thereby registering growth in all of our 4 segments. In the last quarter, the company further expanded its business in the defense sector by getting an order for supply of special mobile cranes to Defense R&D organization, and also received an order for supply of special truck-mounted multifunction cranes from prominent electricity department. Our regular innovations and persistent R&D efforts make us capable to deliver such equipment under the Atmanirbhar Bharat initiative of the government. On the operational side, the commodity inflation continues to be a significant headwind for the industry. The prices for many commodities continue to be at multi-year high. Steel, metal, crude, rubber, and allied product prices continue to be at elevated levels. So in summary, while the operating environment improved, it has remained challenging. Further, we expect that inflationary trend will continue in the current quarter also, and it may lead to some pressure on margin profile in the near term. In these challenging times, we are confident that a clear and compelling strategy, together with our growth fundamentals and operational excellence, will hold us in good stead. We remain focused to deliver on our growth agenda, growth that is consistent, competitive, and profitable. We will try and continue to manage the delicate balance of ensuring competitiveness of our brand and keeping our EBITDA margin in a healthy range. The past 2 years were tough for the nation and the economy. Appearance of Omicron variant even before the economy had completely recovered from the shocks of previous 2 waves has made the environment more challenging. COVID cases have risen again in January, and it is a reminder for all of us that the pandemic is not over yet. In these challenging circumstances, your company has emerged stronger thanks to our team members who kept their focus on serving our customers. Looking ahead, we raise our revenue growth guidance to at least 23-24% in the current year against our last guidance of 15-20% growth with sustained EBITDA margins. Further, our Honorable Finance Minister has presented the Union budget with a focus on digitization, infrastructure spends, and ease of doing business. The budget is in line with the vision of our Prime Minister to make India Atmanirbhar and a digital giant. Capital expenditure outlay will be stepped up to 35.4% from INR 5.54 lakh crores to INR 7.5 lakh crores in this coming year. Also, the effective capital expenditure of the central government is estimated at 10.68 lakh crores in FY23, equivalent to 4.1% of GDP. Allocation towards capital expenditure and infrastructure layout, including the PM Gati Shakti initiatives, sets out realistic and inclusive vision for the nation. This makes us believe that the demand scenario should be further strengthened and will provide our company strong growth momentum in the medium to long term. With this, I would like to open the call for question and answer sessions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shurit Deora from Palladian Capital. Please go ahead.
Hi, good afternoon. Your results actually were very strong relative to what we're seeing in the industry in terms of volume growth sequentially as well as year on year. Could you give us some insight as to how you managed to, whether you're taking share or what you're seeing on the ground in terms of demand and activity?
Last quarter, we were expecting a good festive season, but somehow it was not up to our expectations. But even then, in wake of that, like I mentioned in my address as well, we were able to put together our show, our customers, our orders, and were able to deliver a decent set of numbers. Whereas for most of our competition in similar industry have degrown, and especially with respect to the construction equipment segment, the entire industry in the last quarter has degrown by around 23%. Whereas we were still able to make headways and increase our revenue on quarter and year-on-year basis. And that is primarily because I would say that our base is small and there is a lot to be done for us in the construction equipment space. So that was one of the prime sectors in backhoe loaders and other things we were able to increase. And yes, with respect to cranes, which are our core business, about 60-65% of the company's business, we are in any case very aggressive and are continually on the lookout to increase market share. And I'm sure we've been able to manage some extra market share there. Exact quantum will be very difficult to quantify at this juncture, but yes, definitely a 1 or 2% gain there looks evident. Metal handling, again, we've done a strong show and we hope to continue that. Agri, yes, definitely quarter 3 is generally good for us and that has happened again. And like I said, in construction equipment and in agri also, our market share, our base is small. So, and like I've always said in the past, for us to be able to grow there, should not be very difficult, and that is what we are focused on. Thank you.
Right. So it seems like a lot of the industry players have declined about 30%, and you've been able to grow your volume. So is it because you're offering more lenient credit terms or you're offering better pricing? Because what we're hearing is that the demand environment has slowed down because there's a lot of slowness in the tendering of orders. So the contractors are not in a position to come up and pay for the equipment.
Like I've always said in the past, the sales or a customer decision to buy is primarily dependent on obviously the right product, the right price at the right service point level. So I think, and that has been our focus throughout, to be able to provide a product which is competitively or technically, I would say, much superior in terms of parameters, functions, or abilities, and reliability as well. So I'm sure that has also played a role. Apart from that, yes, prices are generally competitive, but in November again we have raised our prices, increased our prices to be able to capture the steel price increase which was happening in October and November. So I think it's the right mix of right product, right price, and right customer support and customer friendliness within our company.
Right. And just two quick questions. One is, could you give us a receivables number for this quarter?
Which number? Can you repeat your question?
Accounts receivable on the balance sheet.
Accounts receivable. Luthra sir, can you take that?
Yeah. In terms of DSO, receivables are slightly better as compared to the previous quarter. It is 40-50 days as compared to 52 of the last year.
Sorry, could you repeat that? How much is it?
It is DSO is 46 days as compared to 52 of the last year, corresponding last year, and 48 for the March ending. And in terms of value, it is nearly 200 crores.
Okay. And thank you for that. And lastly, any update on the M&A plans for which you had done the QIP?
Yes, we had raised money for inorganic growth, and we are already working on two smaller options, consolidate the market, and we have already, a basic understanding is in place, and hopefully within this quarter, we should be able to inform the exchanges regarding the activities that have taken place.
Okay, thank you for that. I'll get back in here.
Thank you. Before we take the next question, a reminder to all the participants, if you have a question, please press star then one on your touchtone telephone. The next question is from the line of Vineet Mehta from Sameeksha Capital. Please go ahead.
Yeah, thank you for the opportunity. My first question was regarding the end user market. As the previous questioner asked that there is a slowdown in the industry. So I wanted to understand from the end user point of industry, where have we seen the demand coming from, whether it's from the infra space or the real estate space? Could you give more color on that?
Yes. See, I feel that the demand at the end user space has not decreased. Please mark my words. The demand at the end user has not decreased. Only thing is because of so much input cost increase and inflation. Coupled with that, most of the industry moved to BS4 regime where the engine and the machine costs further increased because of the BS4 engines. The rental segment, which caters to the end users also, they have been a little slow and a little wary because the prices have really gone up quite a lot for most of the cranes and different type of construction equipment. And that is the main reason that the market generally on the whole has been a little subdued. But end user demand remains, and specifically with respect to sectors, if we talk of, we have seen traction totally in the infra side, especially after monsoon. And real estate has picked up very well, especially November onwards, with respect to our tower cranes. And on the whole, even industrial and manufacturing side of our business has been doing reasonably okay.
Okay, that was helpful. And my second question was regarding our agri equipment. So what is the major constituent of the agri equipment sales? And the margins in the agri equipment are increasing, but are still lower than our other segments. So when can we expect the margins of the agri division to reach to our normal average of 10-12%?
The constituents for our agri business are our tractor business and harvester business, and also some amount of the rotavators, rotary tillers, which is a very, very small quantum. Primarily it is tractors. And yes, with respect to margins, we, unfortunately, because of all the input cost pressures and whatever we could pass on to the customers, they seem to be on, slightly reduced level or there is scope of improvement. So I think going forward now that most of the inflation and part has happened, hopefully, and yes, with our numbers further increasing and operating leverage further kicking in, going forward into the next year, I'm sure we'll be able to bring these margins above 10% into 12-13% levels. So we are very confident of that.
Okay. And could you give the split of the agri equipment division between tractors and harvesters and others?
Luca sir, in percentage, if you could give an idea of the revenue split between harvesters and tractors.
Just give me a minute, sir.
Yeah.
Like I think the off the cuff, what is lying in front of you for the last quarter, we've done about 43 crores of tractors approximately. And
roughly 60% is tractor and balance is harvester.
Okay. Okay. Thank you. And my next question, one bookkeeping question. What would be the total working capital requirement last quarter versus this quarter?
The total working capital of the last quarter was roughly about 62 days.
So sir, you're saying it the opposite. I think what the data that I have is for the last quarter was 76 days and this quarter it is 62 days.
Yeah, my current quarter is 62 and the corresponding last quarter was 76. So we have improved on that.
Okay. Okay. Thank you. I will join the queue.
Thank you. Reminder to the participants, if you have a question, please press star then 1. The next question is from the line of Puneet Anand from MK Global. Please go ahead.
Yeah, thanks for the opportunity. So as Saurabhji told that, the year probably will end with a 23-24% sales growth. If I look into 9 months number, which, we have done around 11-20 odd crores. So this means that 4Q will probably be a 10% decline over last 4Q. Is that understanding right?
Oh, I don't think that will not be the scenario. If I'm not wrong, we did about 450 or 460 crores in Q4 last year. I don't have that in front of me, but I think it was around 460 crores.
Yeah, 460.
Sir, I think in the last quarter, March 21, we did 457. Most probably in the current quarter will be similar to that number.
Similar or better.
It will be declined, but the base was slightly very higher in last March 21. Yeah.
Okay. No, because the 23% that you said, I think, just...
It will be more than that for me to answer your question in short.
Yeah, okay. And, so that was...
If it does not happen, then you'd only ask why it didn't happen.
No. I was just, I thought it should be better than what you were saying. That is the reason I said.
It will be better.
Yeah. Secondly, sir, if you can just highlight that since last year, what has been the increase in RM and how much have we been able to pass on the price hike side? And
I think the gap you can very well see in our balance sheets is about close to 2%. We were very hopeful when this year began that we should be at 11-12% EBITDA levels, and we are struggling at about 10%.
Yeah.
The difference in our sales price realizations and the RM input costs that have gone up is close to about 1.5-2%, which we have not been able to capture. This is on top of that, we have actually increased our costs. Even I've forgotten myself because we keep on increasing them so much in the last 6 months, 1 year. But I think 20-25% costs, our selling prices have gone up. So even with that, but yes, still about 1.5-2% needs to either increase in the RM or needs to increase in our sales price to bring us to a 12% EBITDA level in the company, first thing. And hopefully going forward, we are expecting a robust next year. So that should, in any case, even without the sales price going up any further, because as it is pretty elevated. And assuming that the input cost remains similar if it does not go down. So with operating leverage further kicking in with our revenue increasing in the next year, as we feel it will happen. So that would definitely, give us leverage to improve our margins further going into next year.
And I understand it's, slightly early, but any broader number where, one can look into F23, what could be a sales growth number?
That time would be middle end of March. Looking at the current scenario, off the cuff, I can say that doing a 15-20% should be easy. But when I put the numbers together and look at the momentum and look at the overall amount of infrastructure real estate activity happening, including manufacturing, and 3 of our main segments cater to these very things as only infra, real estate, manufacturing. So, it can definitely be much faster than that. I think sometime around middle end March or let's say early April would be the best time. But I think 15-20% is what we can easily assume. You would love it is around 25-30% or more.
And sir, lastly on the backhoe side, you guys have been putting a lot of effort, to increase the overall share. If you can just shed some light, how has this 9 months been in terms of how backhoe as an industry has moved and how we have been able to do? Thank you.
If we talk of the industry, till September end, even the BS3 machines which were in stock were allowed to be sold. But we transitioned to BS4 in April. So that means we were selling our machines which were more expensive as compared to, the biggest of the companies there for first 5-6 months of the year, and we did a reasonable job. But unfortunately, post-September, when the actual price effect, I don't know what's gone wrong with the market. The backhoe loader market really started to squeeze from October, November onwards, and November primarily because of the Omicron scare and the financials were also getting a little jittery. And unfortunately, it has continued well into January, because January is also nearly finished. So there is something wrong with the road construction equipment and the backhoe market as a whole in the country. And like I mentioned, it did go down by 23% year-on-year numbers with respect to similar machines in the last year. That is the data we have from ISEMA, which is our the Association of Construction Equipment Manufacturers in India. So backhoe industry in the last quarter, yes, it was squeezed. There's something wrong, but yes, like I said, our base is small and our intention is to grow. So we have been able to do that. Maybe the pace of growth might not be what we were looking at in this year. It might be slightly slower than that because of, like I said, price increases and the market squeezing. But definitely we are on the growth track. So maybe if not this year, next year we'll show brilliant colors there as well.
And when you say this 23% degrowth in the industry, this you are saying for the entire CE, which includes all our portfolio, right?
That basically includes more or less everything, because certain aspects have, maintained or grown, like cranes or, even concrete and crushing machines. Certain equipment has maintained or grown, but on the whole it has gone down by 23%. I'm sure we can dig out data from that report, how much exactly backhoe loader has gone down in percentage. Somehow I don't remember it offhand.
And as you rightly said, I think to the other participant that while demand remains robust, but it's largely the input cost and it, along with that the BS4 transition of the engines that has impacted the rental segment.
Yes.
And rental segment is like 50% of the market. And how much would be, sir?
I would say 50 or more. Very difficult to quantify precisely because it keeps on fluctuating, but more than 50%. And the rental industry, small, big, organized, unorganized, have still not come to terms with the costing of new machines vis-a-vis the rentals they are getting. So I think it is a catch-22 type of situation or a cat and mouse type of thing that as soon as now, obviously the demand is pretty robust, and we've seen a very strong January, and going forward we see a very healthy February. I'm sure March would be good. Now that Omicron is also more or less behind us, India is getting less than 1 lakh cases. So I think all in all put together, as soon as certain rate revisions start happening pocket-wise or area-wise within the country with respect to the rentals on a monthly basis for the construction equipment, the demand is only going to go north further.
Okay, sir. Thanks a lot.
Mr. Anand, does that answer your question?
Yes, ma'am, I'm done. Thanks.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Chandrika Siddharth from Rika Enterprises. Please go ahead.
Hi, I'm Siddharth here. I have a few questions. My first question is, we did not have a good quarter, primarily because we did not sell enough cranes. Cranes, which is our main segment, did not do well. The construction industry did well. Only we didn't do well in cranes. What is the reason for this? And what is your outlook for the cranes equipment for the next 1 year? Crane segment for the next 1 year.
I would like to answer that. I think whatever you're saying is totally contrary to what we have just spoken about. Yes, we have not done blockbuster in our crane business, but yes, we have grown our crane business. And if we talk in terms of percentage, we have been able to grow our crane business, if we talk sequentially, about 11.5-12%, and around 4.5-5% on a yearly basis. Yes, it's not a blockbuster growth, but yes, much better in a slightly downturn scenario. The second part, what you said, construction equipment has done well. No, sir, I totally disagree. I just mentioned it has degrown by 23%, whereas we have still grown. So I think your question is totally contrary to the facts.
My second question is, backhoe loaders grew by around 25% year on year this quarter. We were expecting 40 to 50%. What happened? Why didn't backhoe loaders grow faster? And is our strategy of cross-selling backhoe loaders to our crane customers working out well or not? Finally, are we still on target to reach the sales of 500 crores from backhoe loaders, 500 crores per year from backhoe loaders within the next 2 years?
Here I would like to say that on a quarterly basis, sequential basis, we have grown 19% in revenue in the construction equipment space and within our company in the segment, and year-on-year basis 22%, whereas we had projected 25%. And we were expecting that it will be faster than that. Yes, we have not been able to attain that, primarily because, like I mentioned, most of the construction equipment industry is slowed down, but we've still been able to grow. But by saying this, I would still like to say that our target to do 500 crores by FY24 end still holds, and we are reasonably confident we will attain it. The last quarter has been a hiccup. We are reasonably confident that we'll be somewhere around 500 crores in our construction equipment by FY24. And there was another question within your questions about cross-selling. Yes, we are already selling our backhoes within our crane segment customers, and we are seeing good results.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Sarthak, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon.
Congratulations on a good growth on the revenue front. Just wanted some detailed explanation about all the products that we have launched for the export market as well as the multi-activity cranes that we have. So there's no revenue breakup for those multi-activity cranes and how they are performing currently. So could you please throw some light on that as well as the export front, like how are we performing with the new backhoe loaders that we have launched as well as the tractors?
Yeah, our export initiative is definitely taken up well, and we are doing pretty okay there. But very, very unfortunately, the container freights out of the country have also become double or triple in quarter 2 and quarter 3, which has seriously affected our export numbers. I mean, we have done well, but we could have done even better. And that is primarily because of the container freight from $1,500 to $2,000, for example, for a destination, they become $6,000-7,000. So there has been a lot of delay which has happened in our existing orders being shipped and then getting delayed, and obviously negotiation for fresh orders. And our backhoe as well as our new tractor range for export market otherwise have picked up well. Our multi-activity cranes, especially our NX360 and NXT models, have picked up well, and today they are working with most of the leading manufacturing companies. Already they have been inducted 1 or 2 machines here and there, and also in most of the prestigious metro projects, whether it is Delhi or Bombay or Kanpur or Patna or Bangalore. So yes, I would say a good beginning for these cranes have happened, and they have been inducted in most of the leading projects, and we would further expect that their numbers will now further start to balloon up.
Okay, thank you. And could you please put a number for those multi-activity cranes, how much of the cranes revenue we are getting from that, if at all possible, estimate?
We have it in the breakup available with us right now, but let's see how. Maybe you can just drop us a small email and then we'll revert back on that.
Okay. Not a problem, sir. Thank you. That's it from my side.
Thank you. Before we take the next question, a reminder to all participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Puneet Anand from MK Global. Please go ahead.
Yes. Thanks for the opportunity again. This engine cost in the overall crane cost, what could that be, sir?
With the BS4 now, it is BS4 again. There are two categories. One is less than 74 horsepower. One is more than 101 horsepower. So the engine cost now is approximately, for a machine bigger than 101 horsepower, I would say approximately around 11-12% or more. I would say 11% to 13.5% for engines bigger than 75 horsepower. For engines between 50 and 75 horsepower, it is about 10% approximately.
Okay. And between the BS3 and 4, that increase would be around 20%, right?
I think a little more than that. Between BS3 and BS4, for between 70 and 74 horsepower, our price increase has been to the tune of approximately 60-65%.
The engine cost 65%?
The engine cost has gone up. See, but it's not only the engine cost. Apart from the 60-65% increase in the cost of the engine, a lot of further electronics also gets added into, because these engines are ECU based engines. So, and they also require these chips and shortages which we are talking about. ECU is an electronic controller unit. So they also require a lot of further probes and electronics and other things, and then the entire electrical hardness of the machine to become more electronic, with the cluster becoming electronic. So there's an additional about 40,000-45,000 apart from the cost of engine increase.
So from if I have to let's assume buy a 75 HP crane, which was earlier BS3, and now from September BS3 is not
engine, and only because of engine and electronics, the cost will go up by around 1.5 lakhs approximately.
Okay. And in percentage terms, what would number be?
So again, it depends. See, these engines are used in machines which are about 16-17 lakhs of cost earlier, and also in machines which are about 24-25 lakhs.
Okay.
So on a 16-17 lakh machine, if you add, the percentage would appear to be more. And on a 24 lakh machine, if you add this cost, the percentage would be less. The range would be anywhere from 6 to 10%.
Okay. So I mean, this is obviously deterring the demand in some sense.
And this is there, but main factor is steel.
Yeah. And steel is almost like 50-60%?
Yeah, steel is about directly, indirectly about 60% of our input cost. Yeah.
And one just trying to understand. So the interest rates have been quite soft for some time, and we a lot of people feel that there could be a hardening in that. That could act as another deterrent in demand, right? Because the renter guy actually must not be buying on some interest, and for him the cost increases, so passing on to the end customers again becomes slightly more difficult. Is that understanding right, or?
No, I would slightly differ on that, because the interest regime has really softened by a reasonable percentages here and there. So even if it goes up nominally 0.5%, 1% here and there, I don't think that will affect the demand. The interest cost generally does not, in our past experience that we've seen, generally does not hamper demand in the rental segment. But yes, this time it is the sudden and massive increase in their purchasing costs that has affected the rental industry. But I'm sure over the next 3, 4, 5 months, 6 months, they'll come to terms and Definitely in some quarters, in terms of the certain segment of customers and end users, we have seen a rental increase by about 5-10% in the last 2-3 months, 4 months. But yes, the demand is for at least about 15-20% increase in rentals. So as soon as that happens, then everything will start to flow again. And without that, also again, it has started to flow because if the end users need the cranes and if they're not getting enough rent, then they have to buy it. So with the opening up of further rental, it is only going to increase.
Okay. Thank you, sir. Thanks a lot.
Yeah. Thank you.
Thank you. The next question is from the line of Mayur from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. I just want to ask what is the outlook for next quarter and how do you see quarter 4 now? Can you share your thoughts, please?
I'm sure it is definitely going to be better than December quarter. And if we talk on year-on-year basis, it would be similar or better than our last year numbers. That is what appears to be as of now, but a little hiccup here and there in the month of March, we really can't guarantee. But as of now, it appears to be similar or better than our last year's performance, definitely better than our Q3 performance.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Vipul Sanghvi from Systematic Shares. Please go ahead.
Hi, sir. Thank you. So one question, and basically if you can share your read across on the agri equipment segment. While what we hear from some of the players on the say plastic pipe size who cater to the agri market, they are seeing demand being tepid. But as I see, we seem to have done reasonably okay as far as agri equipment. So your sense on this particular segment of the market, if you can share some thoughts.
Definitely, agri segment in the country has degrown in the last quarter because there were abnormal numbers and sales which were happening for 1.5 years before that. And but like I mentioned earlier, our numbers are small, our base is small, and from here we intend to grow this business further. So in that effort of ours, I think we've still been able to sustain and been able to increase our numbers a little. So that is the main thing, and I'm sure we'll continue to do that because for us to grow is only by increasing our numbers and a small percentage points in terms of our market share because it's a huge market. That's our intention.
Fair point. And how you seen the first say January and February till date on that particular market? Like usually people are expecting that February and March to be better months because demand.
With respect to agri?
Yeah.
I'm sure we should be able to post reasonable growth in this quarter. That's how it appears to with respect to our business.
Sure. And sir, second question on if you can throw some light on how has our working capital behaved in quarter 3?
See, our
receivables and inventory.
Your perspective. At year-on-year basis, it was at about 44 days, which is now at about 62 days. And in September, it was 76 days. So it has improved sequentially, but if you talk of year-on-year, definitely there is a need to improve it further. And it is primarily driven that we are, as a matter of fact, like I mentioned, that we were expecting good or much better sales during the festive season, but somehow the overall scenario remained a little tepid. And we are carrying a little excess inventory in our system. So last year, December, we were having about 220 crores of inventory, which is now about 317 crores, which I'm sure will rationalize by end of March. So the working capital would again fall in place to about, hopefully about 45 days by end of March. Right, Luthra sir?
That's right, sir.
It is a little elevated as of now, especially because of inventory.
So the present number is 45 days. That's the number, working capital?
Present December end number is 62 days.
62 days, okay. So I am referring to the page 15 of the presentation, which says our FY21 number was at 29 days. that has gone to 62 days and should come down as we draw down our inventory by March.
Yeah, that's right. And
days or
basically,
39
yeah,
days?
sorry.
9 days.
And we have been supporting our vendors in these tough times. We have been slightly paying them early also.
Luthra sir, end of March, the data that I have in my hand, it says 39 days was our working capital days.
39 days, yes, 39 days.
But the gentleman is mentioning 29 days. That's what I'm wondering.
I will just check, but it is 39 days. Yeah.
I am referring to, if you can look at the page 15, FY21, that is March 21 working capital days are at 29.
I will just recheck and confirm to you.
No
Is the current earnings presentation?
Yeah.
Vayom, please check if by mistake something wrong has been mentioned.
Sure, sir, I'll check it up.
It is 39 days. I can confirm that.
39 days.
Which is, this was end of March. And end of December last year, 20 was 44 days. End of December 21, it is 62 days, and we are very hopeful it should be around 45 days by end of March.
All right. That's all from my side. Thank you.
Saying what Mr. Luthra was mentioning, end of March, our creditor days was around 330. Sorry, not days. 330 crores was the creditor amount. Today it is 282 crores. So we have reasonable amount of scope to put it right in the next 1 or 2 months.
All right. Thank you so much.
Thank you. The next question is from the line of Sharit Deora from Palladian Capital. Please go ahead.
Hi, thanks again for the opportunity. I'm just trying to understand what's happening on the demand side. So you mentioned a few times that post Diwali the demand has just cooled off, and I'm trying to understand if that is due to high prices or if that is due to some weakness that the contractors or the renters who buy from you, or whoever is using the product, are they seeing weakness in their usage of those products because tenders are not being put out, or there's some other issue, or there's no credit in the market that they're not able to access credit and therefore they cannot buy the equipment?
Oh, I don't think so. That is not the reason. There is a definite demand, a good demand in the infra and the construction side, with the contractors and the end users, even in the manufacturing side. And December, we saw our order books swelling up again. November was slow because that Omicron thing, internationally, globally had started to this thing, and the finances became a little, tight in terms of leaving out finance. So November was a little not so good. December the order booking was very good, even execution was reasonably okay. January has been very strong, and we have entered with a strong this thing in February. So the demand is definitely there. It's just that it can be further increased or improved as soon as most of the rental segment either comes in terms with the current machine pricing vis-a-vis the rental, or if the rentals end up increasing a little bit more, which I'm sure will happen, then the free flow will start again. But the demand at the end user is reasonably okay. I really don't see that, we've seen so much of fresh ordering from end users, contractors. And real estate is going very strong.
Right. And of the total sales, what percent, you don't rent anything at all, right? You might be selling to renters, but you don't rent anything yourself.
Very few. We do have a rental division where we give tower cranes, which are predominantly for the real estate segment. So we have a fleet of tower cranes for rentals for this thing, which contributes about 10-12 crores to revenue every year, right, Uttara?
That's right. So in 9 months we have done about 10.5 crores.
Yeah, it's about 14-15 crores on a year basis. And we have a small fleet of road construction machinery, which was initially created as demo machines and to be supplied to bigger projects on rental basis, so that to prove the worth of the machine. So we still carry that fleet of about 20 odd equipment plus minus in our rental business.
So it's safe to say that a vast majority of the sales, 90% plus, 95% plus, is outright sale. And those, out of that 90-95%, how much is going to renters versus people who are using it, actual users?
Well, you'll have to repeat your question. I was not able to figure that out. Sorry.
No, so I'm saying out of 95% of your sales, which is outright sale, what percentage of the buyers are renters versus actual users?
Okay. So not 95, I would say 99% of our sales, because if you talk or look at the turnover with the rental turnover, 99% of our sales is the actual sales to end user, to customers. And I would say more than 50% or approximately plus minus goes to rental, and balance goes to end users directly.
Okay. And what is the financing arrangement that these buyers usually have? How much do they pay from their own pocket versus borrow?
See, all the leading NBFCs and banks are funding our equipment. And, again, depending on the customer profile, the margin requirement could be anywhere between 5-10% going up to 30-35%, depending on the customer profile. So, customers get financing, even they get 100% financing. Certain bigger customers can get 100% financing, but I would say it's a 5-10% upfront margin requirement going up to 30-35%. There are slabs. Somewhere LTV is around 70%, 75%, 85%, depending on the strength of the balance sheet of the individual customers.
Okay. And the availability of credit, in your opinion, is not an issue, is not a reason why there's any issue or there's no challenge you're seeing on that front?
Was an issue in the second half of November, going into till about, I would say, mid of December. For that 1 month interim period, mid-November to mid-December, there was definitely a credit squeeze by the NBFCs. They were scared what will happen because of Omicron or whatever. But I think by end of December, we saw things were sort of streamlined, yes.
Okay, great. All right, thank you.
Yeah, thank you.
Thank you. The next question is from the line of Ashwani Sharma from Anand Rathi. Please go ahead.
Hi, good afternoon, and thanks for the opportunity. So my first question is on the defense. So what is the kind of tender pipeline do you see on the defense side?
See, we have in the last 3-4 months back some good orders, that multi-purpose 4x4 tractor, and then the DRDO orders with respect to the special cranes which are going to be mounted on the missile launchers. Then certain other cranes for, again, missile testing beds, for the bigger missiles that we produce in our country. And then again some DRDO orders. And so that is what we've been able to do in the last 3-4 months. But all of this was based on the hard work of the earlier 1.5-2 years. So in the pipeline we have further a reasonable amount of 3-4 bigger inquiries. Or let's say requirements which have also been worked upon simultaneously. So if everything goes well, in the first half of next year, we should see a couple of them, reasonably bigger ones, maturing. And 1 or 2 still left for the second half of next year, yes.
So if I have to see the contribution from defense, let's say in FY23 or 24, what number would you like to give, sir?
Can you just repeat your question again, please?
So in terms of revenue contribution, let's say from defense in 23 or 24, what number would you like to put?
Just a second. I'll have to take 20-30 seconds to do that for you. Just a second.
Mr. Sharma, does that answer your question?
In FY23, we should be doing anywhere between 100-150 crores in defense, if not more.
All right.
Yeah, if not more. The possibility is that this 100-150 crores can be exceeded in FY23.
Yes, sir. So that's helpful. So my second question is on the price hike. If you can help me with the price hike which we would have taken in Q3 and also on a 9th-month basis.
Like I said, even I am confused and I have forgot. We took a price hike in November last year, then we took a price hike in January, then we took a price hike in March, then we took a price hike in June, and then finally we took a price hike again in November. I am myself a little confused on the total quantum, but should be somewhere between 20 to 26% now.
20 to 23%?
26%.
Oh.
So I am myself confused about the percentages, so many have happened.
So this would be predominantly in the crane?
This what I'm talking about is with respect to cranes, and obviously something similar little here and there has happened with respect to other machines.
So can we expect another round of price hike in current quarter as well?
No, we don't want to do any. Luckily, steel prices did cool off a little end of December. So I don't think so. We cannot afford to have another price increase. It will be very detrimental for the market. Yes, but if the need be, if the inflation continues unabated and things further go up, then we'll be left with no other option. But we have no intention of increasing our prices at the current juncture further.
Okay. Yeah. Thanks a lot.
Just for example, with respect to backhaul loaders, the construction equipment segment, we had a price increase on 1st of January also again after November. But yes, as of now, whatever we wanted to do has been put in place, and now we just want to increase our numbers and just hope that the commodity remains the way it is or further slides down so that we get the benefit in our selling.
Right, sir. One last question to Mr. Luthra. So what would be the cash on book end of quarter, end of Q3 quarter?
We had nearly about 185 crores.
185 crores. Okay. Thank you very much.
Thank you. Before we take the next question, a reminder to the participants to please limit your question to 2 per participants only. The next question is from the line of Sarthak, an individual investor. Please go ahead.
Yeah. So sorry again, sir. So first of all, I just wanted to ask what are the capacity utilizations for segments individually, and if you could throw a light on what type of capacity utilization we are expecting in the next year, as well as because operating leverage will kick in and then we'll have a better margin upfront. So that's the main reason I wanted to know about this.
Yes. See, in cranes we are currently working at about 50 to 60%. So we have enough room to further be able to produce more. In construction equipment, we are close to about 35%. Metal handling, we are about 80%. And we are already planning that we need to expand something quickly to cater to the next year. And in agri, again, we are working at about 35%.
So basically we are expecting margins to increase when this goes to around 50-55 in construction equipment and agri as well, right?
Yes.
Or are we planning to remain on the same margins to increase the market share?
See, margins all across, even in cranes and construction equipment and agri, will further increase with increase in utilization, for sure. Operating leverage will kick in. Assets which are not to use totally will get utilized, and obviously fixed costs remaining similar to what they are. Definitely operating leverage will come in, and with improving utilizations, the margin profile will start changing in these segments, and that's how, in cranes we are already about 11-12%, so we might go to 13-14%. These segments will come to 10-12%. So on the whole, we'll be easily around 12 or 11.5-12% is easily possible.
So by 2025, the target that we have of 2,500 crores with around 14 to 15% margin, so that is on track currently, right?
I think so, but it is not up to 25, it is FY24.
Okay.
So in the next 2.5 years, our target is doing 2,500 and 13 to 14%. I do not know. 14-15% is possible, but yes, 13 to 14% is what we think should be realistically possible.
Okay. Thank you for my.
Thank you. The next question is from the line of Sarika Kushashia, an individual investor. Please go ahead.
Hi. If you can elaborate, we seem to have added some capacities during the quarter. Under which segment would that be?
No, we have not added any capacities during the quarter. We can produce 800 cranes per month. We can produce 150 construction equipment per month. We have the capacity to produce 175 metal handling per month and about 600 agri per month, and we have not added any capacity per quarter.
Okay, so the capex which actually has been planned for the year have we already spent some or?
So I couldn't figure out your question.
Okay, so probably we were to undertake some 40-50 crores of capex during the year.
Yes, that was something different. Yes, that was for the paint shop. Of that, and ordering is well underway as of now. So it has got slightly delayed. So we are planning to set up a world-class paint shop keeping in mind our product quality in India as well as for the export. So that is under planning and execution as of now. So some part of it might come in quarter 4, but most of it will go into the next year.
Okay. And at what point would you be comfortable adding significant capex, taking into account the union budget and the continuous ongoing?
Capex we should be looking at only in FY24.
FY24.
Yes. Once we are on track to our 2,500 crores, then we might need to add capacity.
Okay. All right. Thank you.
Yeah.
Thank you. The next question is from the line of Ashok, an individual investor. Please go ahead.
Yeah, am I audible?
Yes, loud and clear.
Yeah. So first of all, congratulations to the entire team for the good result. So a couple of questions. First one is on the side of market share. So how do you see the market share panning for the material handling products for it?
We are close to at about 25% right now. And going forward, I think it is 24-25%, yes. And going forward, I think in the next 1-2 years, we should be somewhere around 28-30% with respect to market share for material handling. In mobile cranes, we are already about 60-63%, maybe a percentage more within this quarter, which cannot be verified as of now. And we are hopeful that in the next year, we should be crossing 65-66% there as well. And with respect to backhoe loaders and agri, obviously our base is small. So I mean, there we are not really looking at market share because not worth mentioning, but we are looking at increasing our revenues every year by at least 25-50%, if not more. That's our target there.
Sure. And as I understand that the capacity utilization is still sub 50% level, how is the demand side pull from the market so that we can ramp up the capacity utilization? I understand operating leverage will kick in, but unless there is a demand from the market, we may not be able to get much of a benefit from this. So how do you see the demand side?
The demand side from middle of December has picked up very well. And January, we saw really good demand going well into February. We are already on 7th today. So the demand seems to be robust. Yes, in the construction equipment segment and agri, there is a little slowness. But like I said, in these two segments, our base is small, so we're really not worried.
And the last one on the strategic side, since one of your competitors who is in the crane business is not doing financially well, so are you also seeing that the eastern part of market is also getting good for ACE now?
Which part of the market?
Eastern part of India, because one of your competitors is not doing well financially. So I understand that there can be an opportunity for ACE to grab that market share as well from the competition. Yeah.
With respect to our bigger cranes and crawler cranes and truck cranes, where we compete with them, definitely we are seeing better traction, yes.
Fine. This helps. So all the best for the upcoming quarters. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Yeah, thank you. Like I mentioned that we are very hopeful that our Q4 should be similar or slightly better as compared to our last Q4, and we are very hopeful and bullish for the next year. With most of the growth drivers in place, and things seem to be sorted out for us, and we are looking at incremental growth with respect to especially our construction equipment and agri business. And yes, cranes and material handling are also, we feel that will contribute in a significant way in quarter 4 and obviously going forward into the next year. So all in all, things look good, and we are very hopeful that we should be able to do even better in the coming year and also in this quarter. Yeah. Thanks a lot. Thank you.
Thank you, everybody.
Yeah, thank you.
Thank you very much. On behalf of Edelweiss Broking Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.